Good afternoon, everyone, and welcome to the SPS Entrepreneurs Network Speakers Series today. We're thrilled to welcome four incredible panelists who are leaders and pioneers in venture capital, private equity, and startup. We can't wait to hear more about their inspiring journeys and valuable experience. So my name is Connie Ko, and I'm a member of the SPS Entrepreneurs Network and will be moderating today's event. I graduated from Columbia SPS with a Master of Science in Applied Analytics last year, and currently a venture analyst at Syndicate 708 and investment associate at Crest Investment Partners. The SPS Entrepreneurs Network is a shared interest group for Columbia SPS students, alumni, and faculty who are passionate about entrepreneurship, startup, and the investment ecosystem. Our mission is to foster connections, share knowledge, and provide opportunities and resources to help another succeed. So today's session will feature a live discussion with our panelists, followed by a Q&A session. So please feel free to submit your questions at any time using the Zoom Q&A feature below. So before we dive into today's discussion, let's take a moment to welcome our four incredible panelists. And Angela, would you like to start by introducing yourself? Thank you.
Happy to. Thanks, Connie, and thanks for the network for having me. Great to be here. My name's Angela Jhanji. I'm a managing director at EQT Partners. That's a Swedish private equity firm, currently, I think, around 250 billion assets under management. I'm also a faculty member at SPS, and I teach sustainability value creation in private markets as a course. It's great to be here.
Manica, do you want to introduce yourself?
Hi, everyone. Thanks, Connie, so much for including me and putting this together. My name is Manica Blain. Top Knot Ventures is my balance sheet. It's my own fund. I started my first fund about a decade ago. It was called Campfire Capital, and it was a $32 million fund backed by over 30 current and former Lululemon executives. So we were heavily apparel investors, early stage, Series A, sort of our sweet spot. Investments we made that you would know of would be leading the Series A for Figs, the healthcare scrubs company. I was also a big investor in Cotopaxi and Frank and Oak. About 3.5 years ago, I led my first beauty investment, and I've been very heavily steeped in that sector since. Through Top Knot Ventures, I've made 12 investments now, and 7 of them are in beauty. So that's the world I've been in lately. Thanks for having me, and I'm looking forward to the discussion.
Great, thank you so much. Micki, would you want to introduce yourself?
Hi, sure. I'm excited to be here today and have this conversation. So my name is Micki Weiner. I'm the founder of Petal and Ash, which is a circular lingerie brand currently in development. We have a mission to empower women through comfortable and beautiful lingerie made from materials that are safe for the most intimate parts of their body. I also have a master's in sustainability management from Columbia, from the sustainability management program as part of SPS. I graduated very recently, spring of 2024, as part of a major career change for me. I also hold design certificates from Fashion Institute of Technology, and I'm a part of the newly formed Fashion and Climate and Energy Network, which is part of the Earth Networks through Columbia's Climate School.
Thank you so much, Micki. Jenny, would you want to introduce yourself?
Yeah, great to be here. I'm Jenny Fielding. I'm the founder of Everywhere Ventures. We're a very active pre-seed fund. We've invested in about 270 companies. And what makes us unique is that we raise all of our capital from other founders and operators. And that's the kind of the source of our deal flow. I'm a 2-time Columbia grad. I helped develop a class for undergrads called Venturing to Change the World, which I taught for 8 years. And just thrilled to be part of the Columbia community.
Awesome. Thank you so much again. We are truly excited to have all of you here. And first question to all of our panelists here. So what initially inspired you to pursue a career in venture capital, private equity, and entrepreneurship? What advice would you give to aspiring founders and investors looking to break into these ecosystems?
Happy to kick it off. So I'm both an accidental entrepreneur and an accidental investor, but I think that is the career path of many of us who end up here. So I went to law school, worked in finance, and then in 2007 I started a company, and that was just really based on a personal need that I had. I didn't really even know what venture capital was. I didn't really know much about entrepreneurship. It wasn't encouraged in my day as an undergrad at Columbia. So yeah, I was just trying to solve a problem I saw in the world and ended up starting a company in my living room. That company scaled, and we ended up having a really great acquisition. Then I started another company. Kind of once I got into tech, I knew I was never going back. But after I shut down my second company, which was not as successful as my first, I was working on my third, and people started reaching out and said, have you ever thought about investing? And I'd done a little angel investing, but I hadn't really, thought about being an investor. And I met the folks at Techstars. They were looking for someone to run the New York office. And they said, founders make really good investors, had I thought about that. And I thought I was going to spend a year there, kind of just learning what the other side was, because I was an entrepreneur through and through at that point. I ended up spending almost 8 years at Techstars, where I was able to invest in some incredible companies, including a company that ended up going public and 3 unicorns. So I really felt like I kind of came into my superpower as someone that maybe wasn't a founder, but that helped surround founders with the resources that they needed. So that's a little bit about my path. Again, not very planful. I guess kind of opportunistic, but I feel like that is the journey of many folks that go into venture. A lot of them start as founders and find their way to the investing world.
Great. We'd love to hear more about Manica. You also create your own fund and even invested in those iconic brands like Fix. And
yeah, for sure. No, I think first of all, I think the best investors are the best operators. So I think Jenny has a great background. I probably come from a more I won't say typical investor background, but I started my career in investment banking. I graduated from University of Toronto. Don't hold it against me, Columbia alumni. In 2005 with a commerce and finance bachelor's degree, and went straight into investment banking, which was what we all wanted to go into back then. And I spent 5 years in investment banking, and I found even back then that the most fun I would be having wouldn't be like advising on these huge cross-border mega deals. I was based in the UK with Citigroup in their consumer and retail M&A team, where I found I had like the most fun was, they're almost called like these pitches, you've got a big meeting with the Diageo or whatever, and you're doing the landscape analysis with a bunch of case studies on various smaller brands. And honestly, like it wasn't even a deal. It was just like a pitch. And I would just have the most fun researching early stage trends, early stage brands, piling through like analyst reports, and just, I always enjoyed that piece of the work. So I think I probably knew at an early stage in my career, back in, the 2007 to 2009, 2010 era, that I would eventually find my way to early stage. From investment banking, mostly M&A, I went into private equity. So buyout, I worked for Onyx for 5 years, first with their mid-cap private equity platform OnCap, and then with the mothership Onyx Partners, and more on the fundraising side. But still, where I found I gravitated, even in my world within OnCap, was the small bolt-on acquisitions of like the smaller businesses. And that's where I that's where I excelled. That's where I had the most fun. So when I met several Lululemon executives, this would have been in April of 2011, and just stayed in touch with them. The idea of Campfire Capital, which was our first fund, was born out of the idea that there's all these terrific operators, within a business. And if you can rewind back to 2009, 2010, Lululemon was still, it was big, but it wasn't like the multi-billion-dollar behemoth that it is today. And, you had a brand that was quickly scaling from about, 100 million to 1.5 billion in that, 2008 to 2013 era. And you had all these executives that had incredible experience in scaling a consumer brand of today, call it. And so it was the early 2010s, and all these digitally native, digital first brands were starting to merge, and they were thinking about going from strictly e-commerce to physical, to stores. And Lululemon back then, and probably still today, what it was known for was incredibly productive sales per square footage. So they used to get all these opportunities from early stage brands, like legit the CFO of Warby Parker, Steve Miller, would call the CFO of Lululemon and be like, hey, we've got all these tech investors that are backing us. We'd love to get an investor with like deep expertise and roots in on the operation side and consumer. And so all these executives from Lululemon would get these awesome investment opportunities, in early stage consumer. And that's where the idea of Campfire Capital was born. It was the idea of bringing together a pool of operators with really relevant experience and investing in the rising stars of consumer retail, that next wave of businesses. And so that's how I got into it. I met these Lululemon executives. They were like, okay, we're a bunch of operators. We need someone that like understands the investing world. And it's kind of funny because I had never even written an angel check at this point. All I knew was buyout private equity, which is very different from early stage investing in venture. But I don't know, I was 32 years old and fearless. And I was like, if I can help raise a multi-billion-dollar private equity fund, like, would it be so hard to raise a $30 to $50 million venture fund? How little did I know? It took us 18 months. My co-founder and I, we lived together for the first 6 months of it. Like legit, we rented out our separate homes, and it was a struggle. But we raised a fund. We had a lead institutional anchor investor, BDC Capital, which is the largest investor here in Canada on the institutional side. And against all odds, similar to, I guess, Jenny's fund too, we were mostly backed by operators. So 33 current and former Lululemon executives, as well as founders, operators in consumer with deep knowledge networks and expertise. So the founder of Aldo Shoes, Aldo Ben Sadoun, the founder of David's Tea, David Siegel, Charles Chang, who built and sold Vega. Just some wonderful operators were on our roster. And that certainly helped us from a deal flow perspective. Figs, right, came straight to Christine Day, who is the former CEO of Lululemon and also one of my partners in the GP. All of these great opportunities would come in through our network. And I'm sure, Jenny, you see that through within your fund. But anyway, long-winded way of saying that, I think another path to get into venture is like I said, going from more of the finance investing side. That being said, I did learn very early in my investing career that I think the most value that you can really add are from operators that been there, done that sort of thing, and have that bench of expertise.
This is very incredible. Being opportunistic and fearless mindset to create your own fund and doing really awesome work. Micki and Angela, I would love to hear more.
Yeah, sure. So mine is definitely not traditional either. I am also sort of an accidental entrepreneur. I have a prior career in the performing arts. I was a professional dancer, and there's a age cap on what that career looks like. And so, I was trying to sort of think about, I like to say, like, what I wanted to be when I grew up. And I have always really been into intimate apparel. I think there's a connection, I think, actually for a lot of dancers, of being aware of their and in their bodies and how they connect through the world around them, through how you move through it quite physically. And so this idea of being comfortable in your undergarments, feeling empowered in your undergarments is something that's always really spoken to me. And basically the pandemic happened and my industry went dark. And I sort of needed something to hang on to, something to stay sane. And I started doing a lot of research, and became, borderline obsessed with materials and really understanding their impact. And I think whether it's fearlessness or naivete or a little bit of all of the above, I think when you don't really know what is in front of you, there is a bit of an ability to kind of just think, well, obviously I can do this. And so you know, a lot of research led me to kind of finding a white space in the intimate apparel market, and really, you know, understanding that within the landscape, if you wanted something, you were either buying something that was sustainable, but maybe not quite as aesthetically pleasing, or if you wanted something that was more aesthetically designed, you were making a lot of sacrifices in terms of the material types, the dyes, and all of that. And so it just felt to me like there was a need for a solution in this space. And then you know, the more I dove into kind of, you know, I have a family history in the fashion industry. And so I also kind of through conversation realized that if I address this problem just in understanding that industry specifically, that I might sort of be, by no fault of my own, creating other problems because I wasn't understanding the landscape fully. I wasn't kind of taking a holistic look at sustainability. And so ultimately I decided to get my master's, and so that I could have this broad understanding. You know, fashion is a really unique industry where within its supply chain, it touches across so many other industries. And so it's really important to have that holistic understanding of the space. And yeah, so my journey has taken quite a few twists and turns. When I originally started development, I as a solopreneur at that time, a lot of the solutions that I was seeking didn't quite exist, or they didn't exist at the capacity that I could access them, or actually, quite frankly, anyone could. There was a lot of development that was going on, really cool, innovative solutions that companies had, but had literally sold to absolutely no one because the market just wasn't there yet. And I think the market is starting to slowly creep up. And so what's exciting, you know, for me is that it's able to meet me a little bit more in development with what I need to create a circular product in this space. And yeah, we're in development right now. I actually just received my panty prototype a few days ago. So that gets added into our bra prototype, which we already have. And we're looking at a probably fall 25 launch. So yeah, it's a bit about my journey.
Yeah, looking forward to your launch for lingerie. Angela, love to learn where you're
Yeah, happy to. I mean, great conversation so far. I feel like we need a glass of wine and a fireplace, and this would be great. But so a little bit about me, again, similar to a kind of non-traditional path. I think, you know, it actually started off pretty young when I was, you know, pretty clear that I wanted to understand commercial, but also was quite interested in this kind of social impact charity type work and how to scale solutions. And a part of before I actually went to university, I was on a couple of charity boards with quite useful mentors, right? And I was again, maybe Manica, a bit bold, a bit young, and not afraid to ask. But I remember being on these boards and asking, you know, what is it that I should focus on? Or them asking me really, like, what is it you want to do? And I was like, actually, I'd love to be Secretary General of Amnesty International. That's my passion in life. And what was really useful at that point was these mentors turning around, and you know, they work for Accenture and IBM and all sorts of kind of large organizations. And they were like, you know, you've obviously got a passion for this social change piece. That won't change. But what might help here is thinking about a skill set that will empower you to make the greatest change. And that might be around how businesses work and how the kind of private sector works. And so I actually joined Accenture for almost a decade, where I focused in on kind of the commercial piece of, you know, what does it take to change a balance sheet? How do you think about business growth? And what are the levers that you might use when you think about upside in terms of revenue, as well as downside in terms of balance sheet cost savings, etc. And what I learned there was, you know, there's something in that talked to both my personality. So this, if you're part of my lecture in my course currently, you'll know that it's very high velocity. And that just, you know, talked a little bit to my own personality, where I would really enjoy going from one business to another business and being able to flip between, you know, supply chain. It says that Manica, also Rio Tinto, Diageo, Unilever, trying to talk to them about, you know, what does it look like to capture this new kind of consumer set called millennials, and how do we think about that? And what happened was I was focused super clearly on commercial insights. And I realized that if you start to look at commercial, you start to look at something like supply chain, what happens is you start to look at water, waste, and materials, and then transport. And these things actually have a social impact, but they also, environmentally start changing the way you might think about optimization of a business. And I was pretty good at that. I was pretty good at talking about business, kind of commercial, but equally how to think about operations and tie it into this word called sustainability. So essentially focused in on that and had my head down pretty aggressively, going up the food chain there and building both my skill set, the reps in the market. So how can I get the most exposure? How can I do different sectors and get an understanding of what's different and what's similar? So almost that mindset about scale, but inside an organization that has the opportunity to touch, FTSE 100 companies, mid-market companies, and then companies at the super early stage. And a part of doing that with my head down and trying to figure out, what was I good at and where should I double down, essentially ended up being placed in an organization where I was running P&L. And one of the products we were pushing and trying to kind of, figure out was how to think about sustainability and diligence. And so I'm not necessarily in that kind of venture space. I'm more in the big buyout GP space. But what was super exciting was, how to take my skill set into an area where there's quite a large bit of AUM, but a lot of control. So can you suddenly essentially have a portfolio where you can move the dial in terms of active ownership, think about the types of change that you want, and then use your influencing ability or the way to talk about both commercial and sustainability together to move an entire portfolio to a place where private markets can have a pretty solid, a strong impact on the way that we think about commercial and sustainability gains. So that's a little bit about me.
Great, thank you so much. I can definitely tell all of our panelists going through their passion and continue to being a leader of their ecosystem. Next question, I'd love to learn, looking back, is there any pivotal moment or piece of advice that significantly impacted your career or in terms of leadership or personal growth?
Well, I kind of just like to chime in on like what everyone just heard, which is probably, 2 or 3 times a week, I have people in other careers saying, how do I get into venture capital? And I mean, this is the answer right here, is that most people, especially diverse people, there isn't really a linear path. Like there's so few of these jobs. And, people like, me and others on the panel just needed to start our own. So it doesn't really exist. So I think like the answer there is like, you need to build your skill set for the most part in other areas. And, venture could be the ultimate place that you want to end up, but it's very hard to start there. There are very few junior roles where you can make your way up to being a general partner. So to parlay that into, anyone gave me advice or whatnot, I just think that's the advice that I try to give people, and they kind of don't understand it, or they think that it's like not fair, but that it's just such a cottage industry venture. It's so small. There's only a handful of funds. And for the most part, those are started by 2 demographics, either rich people, like people that have made their money before that are able to kind of stake their own funds, or people that have built like very long track records at other funds. And getting those jobs where you can build the track record is really hard. Like those are your 2 paths to getting a business as a VC. And like, it's hard for people to hear, but it kind of is. So the advice that I give, and the advice that, basically I got through osmosis, was build your skills doing other things. So, I was an operator. I had a background in law, and I built 2 companies, and that foundation was a really great foundation for starting in venture capital. So that's kind of my advice that I heard, maybe not directly, but indirectly.
Yeah, I heard having an operation experience and founding experience is really important to put your foot in the door in VC. What about others? Do you have any?
Yeah, I mean, I was going to say, like, people don't all know this story, and I think it's an interesting one, but the bottom line for me, and this has happened multiple times in my career, is that these chance encounters, and always take that meeting. So for instance, how did it happen that at 32 I left a very large private equity fund to start a venture capital firm with the former CEO, CFO, and director of business development at Lululemon? Like, how did that happen? Well, it happened because between 2007 and 2010, when I was in the analyst associate pit, in investment banking, like working my butt off, eating out of a pizza box, like I knew I was going to come back to Canada. And I had like spammed a bunch of Lululemon executives just on LinkedIn. It was like early days, being like, hey, maybe one day I can work at this like cool Canadian brand that I admire and love. And I didn't hear back initially, but about 8 months into my gig at OnCap within Onyx, I got a call from the director of business development, and they were looking to hire somebody in business development. I had a job already. I wasn't going to go work for Lululemon, but I thought, hey, I'm getting a call from like the fastest growing retailer on the planet. Maybe I meet them. And so they thought I was probably crazy, but I was like, hey, I'm not going to take the job. I've landed at this great private equity firm, but I love what you guys are doing. Could I fly out and meet you? I'll pay for my ticket. They're like, okay, this chick's crazy, but come on out. And I got to meet a number of them and built some close relationships. And had I not jumped at the opportunity to take that meeting and to have that conversation, who knows, like where I'd probably maybe still be at Onyx, who knows, right? But it's like I think taking opportunities as they arise, to even just take a meeting to learn more, to build that network, that connection. I mean, I think there's two things that very strong venture capitalists and I know do really well. One is they know how to raise money and help their portfolio companies with that. And the second thing is just their networks. They have fantastic networks. And so build your network is what I would say. Lead with your superhero strength, whatever that happens to be. If it's law, if it's finance, try and get within the network or the community of whatever sector you're trying to break into, become a specialist, and always take that meeting. You never know where one meeting will go or what network you will end up building through that. Like I've often believed in that.
Great. Yeah, I follow Manica and Jhanji on LinkedIn, and I see them hosting incredible dinner parties, and it's something I learn being in BC. Angela and Micki, love to learn.
Yeah, maybe if I just jump on, the one thing that you've probably heard, well, everyone on the call, like from Jenny and from Manica, is this notion of the ecosystem. And so I get a lot of the students in my class coming to me afterwards and kind of, just asking about, the private market space, whether that be venture growth, buyout, different types of asset classes, real estate, infrastructure. And the three things that I would say to you guys is look up the ecosystem, because I think Jenny's pointing to like ventures investors, but ventures investors or even private equity investors are supported by a large number of other functions that are in the ecosystem. So if you tell me that you're super interested in transactions and you like the velocity of transactions and the diversity of transactions, well, there are a ton of advisors out there that are supporting transactions. If you tell me that you like operating and you really want to see companies grow, then there's operator roles within companies where it might be useful to get your rep. So first, make sure that you understand the ecosystem around the area that you eventually want to land in, and that you've researched it so you understand the different nuances. That's super important, because my second point is be super clear on your ask. The amount of conversations I take where, we're confused about what we want, so we're asking notional questions. I think Manica is exactly right? Like, I mean, you can turn up to a conversation and you can take it. But if you're not clear in that conversation that you understand the kind of environment you're talking about, and then you know what you want out of that conversation, that's probably not going to be the best use of your time and the person you're talking to time. So the probability of that conversation turning into something that Manica just said is going to decrease based on the amount that you fully understand about where you want to end up. And my third point is, if you don't ask, you don't get. That was somebody, it was a coach that told me that when I was in one of the kind of youth leadership programs, and I've always had it in the back of my subconscious. As much as, there is a bit of gumption, maybe there's a little bit of luck. Manica, you're talking about, there could be a lot in the ether that helps you on your way, but fundamentally, you are the person that's going to be able to articulate exactly what you want and find a path to get there, right? If you shoot for the moon, you'll end up in the stars. So know the ecosystem, understand what that galaxy looks like, and then set your path. But it doesn't matter if you're aiming for the moon, but you end up somewhere close to ventures. It just means that your journey is taking a little bit longer, right? It still means that you're getting more knowledge around the ecosystem, better access to those tools, better access to the people in the know, better access to the understanding of what they do day to day. And so those three things I think are useful for students to think about as they both try to understand where they want to land, but also as they start to email out and meet with these investors. Time is precious, and so make sure you use it wisely. No one's going to tell you that after a phone call if it's not gone super well, but we can do it from a place of kind of guardianship of make sure that you're thinking about that every time you pick up the call.
It's a great advice. I'm taking my notes for myself as well. Micki.
Yeah, I mean, I think from the entrepreneur perspective, it's really stay grounded in your why and make sure that all of your decisions are rooted in that. I think that there's so many, you're constantly faced with decisions, and I've had to make so many pivots along the way. And when you're building a product, there's so many ways that it can look, it can act. And so I think that, I know for me, there've been a lot of moments that have felt very, very pivotal. And the decisions feel scary because you want to get it right. And you can get advice from amazing people in your networks, who are supporting you with your business. But ultimately, when you're the decision maker, you're the one that moves your company forward. And so I think that really going back to like, why are you doing this? That for me anyways, has really rooted me in the decisions that I can then say, okay, great, we did that. And now we move forward on to the next thing. Because I think otherwise it's really easy to just get stuck and not have that forward motion, which is really vital to the process.
Yeah, thank you so much, Micki. For next question, it's more towards data. I learned about this when I was taking Impact Finance course at Columbia. So according to Knight Foundation, only 1.4% of US-based AUM is representing over 82 trillion, and that's managed by diverse owned firms. With more emerging GPs launching their own fund. So I'm very optimistic that this percentage will grow faster than in past decades. So what challenges have you faced in raising capital for your firm or startup or talking to investors? And how do you see this landscape evolving? And what can we or next generation to do to accelerate this change?
Happy to start. So I think there's like a few things happening, and that is most of, I'd say, upwards of 50% of the emerging managers are investing at early stage, like pre-seed and seed, and maybe a little Series A. And a kind of adage you'll hear in venture is your fund size is your strategy. So many of us, we have 100 million AUM, but we raise small funds. So each one of our funds is small, 25 to 30 million. And so we actually can't take in large checks or large amount of capital because, if you're an endowment, you can only be a small percentage of any fund. So I can't take a $20 million check from anyone because they can only be less than 10% of my fund. So as you can imagine, that means my fundraising is really relegated to high net worths, family offices, and some fund of funds, but we can't access that larger capital. What's frustrating about that is that larger capital is the more consistent capital, right? So high net worths are not always high net worths, right? So as the markets go up and down, their appetite goes up and down. Family offices have a lot of dependency to their core businesses, and fund of funds have their own challenges. They're not that many of them, first of all. So what's frustrating for us is that we're too small to access those pools of capital, which would be more consistent. But we want to keep the integrity of the fund. I mean, we might be one of the only funds that doesn't want to raise a larger fund. So we're very happy with our fund size and our strategy. So I'd say that's kind of the challenge for us. And I see this across, I'm involved with all the emerging managers pretty much in the US, on lots of WhatsApp groups and in lots of kind of cohorts with them. And that seems to be the challenge, is that most of us are early stage, and so that we have small funds. And so obviously our AUM is going to be less, and we're going to be a little bit less important in the larger private equity ecosystem.
I mean, so I have a few comments on the whole emerging manager landscape. First of all, I do agree that representation matters. And I think that the more diverse and the number of emerging managers out there that, look like, the general population, if you will, I think that the more diversity you'll find in, obviously, the businesses. When I look at my own portfolio, and I'm a minority woman, like it's I have like incredibly strong diversity in my portfolio, a lot of women led. I think 9 or 10 of the businesses that I've invested in, of the 12, are with at least one female founder. So I just think that happens, and so it's great when you have more diversity in check writers. I wonder sometimes, Jenny and Micki and Angela, if you have a point of view, but I wonder sometimes if the issue's almost on like the institutional LP side. Like, is there enough diversity in that group, right? Like it's sort of I don't see as much diversity in that. And I started my first fund, like I said, a decade ago, right? 2014, 2015, we launched Campfire. And granted, I had no experience in venture capital, and I was 32 years old and coming from big private equity, but it was nearly impossible to get a meaningful institutional investor in our fund. When we did get BDC, they came in for a $6 million check, but it was conditional upon our first time venture capital fund raising 24 million. So it was like based on a minimum viable fund size of 30 million. So we had to raise $24 million before we could close that 6. And it took us 18 months, which in hindsight is actually not that long. But it just seemed like any time that we tried to approach fund-to-fund managers or anyone on the institutional side, they definitely, in most cases, didn't look like us. It weren't reflective of, like, they didn't understand the thesis. They didn't understand the opportunities we were seeing, and it just seemed like, it was difficult for them to take the bet. Now, in hindsight, being somebody that had a first-time fund, and we won't get into the nitty-gritty of it, but our fund ended up in wind down, despite the fact that we made some great bets. Not all partnerships work. And, a few years in, we had a partnership dispute, and we had to wind down our fund. And so I got to understand very acutely why institutional investors have a hard time writing checks into first-time fund managers. This is the first time that these people are getting together to work on something, a very specific thesis. While they may have backgrounds together, whatever, it's the first time they're pursuing this. So I think, I think it's a hard nut to crack, being a first-time fund manager. But I think the evidence shows that most of the time it's the first-time fund that performs the best. It's when you're the most hungry, you're the most, you're really, the empirical data would suggest that first-time fund managers, like their very first fund, is typically their best performer, which is kind of interesting as well.
Yeah, maybe I jump in there, Manica. So I think that's I was going to talk a little bit about the LP side. So I think there's obviously, you've got ventures and you've got the kind of the startup kind of early stage asset class, and you've got the big buyout. So I think a bit of what Jenny was saying is there's a mix of those LPs, right? You've got the large institutional investors, but also high net worth individuals. So it adds that kind of diversity of who's investing in that early stage. On the buyout side, where I focus, and I also, I'm at a Swedish fund, and I'm based in New York. So I get to see the fun of both European LPs and the US LPs, which you can imagine the nuances now with the election that's just happened. But there is a framework now called the ILPA diversity framework. where I do find that LPs actually at the institution level, when it's large checks to large GPs, are talking about diversity inside the portfolio, on the management teams, on the investment teams, and how to kind of transform private equity, right? And I typically don't, I think I have one class a semester where we can talk about diversity because it completely derails the entire class, whichever one it is, because there's so many facets of the kind of push and pull in terms of diversity in private equity and private markets, right? Because once you start to say, yes, we do want to push diversity, both at the portfolio level and at the investor level, what you then have to solve for is how do you broaden the funnel? So how do you get more female investors into that? And I think, you know, Jenny and Manica mentioned that the most typical way of getting in here is, you know, going to an investment bank, getting the reps, or kind of becoming a founder and being able to do it yourself in terms of operator. But there is a way to do this, right? It's been institutionalized in some ways in private markets since private markets kind of existed. Then once you get that talent into the funnel, you then need to get that talent to the top of the investment function, right? How many female investment committee members do we see across the large GPs in the market? Not so many, like percentage wise, right? We have a very dominant racial majority in terms of gender, you know, $100 to whoever guesses which that is. But, you know, it's that push and pull. LPs are asking for it, but when we look at the market just, you know, with a blanket kind of equality, what we see is GPs struggling to both, you know, I think they're getting that talent in now, the funnel starting to broaden. And I think the support network there of, you know, female mentorship, trying to create that connection and support young women in kind of the education system. But once they're in, getting them up to the top, you know, it's going to take, you know, more than a hold period for a portfolio company for GPs to be successful at that. But I do find on my side, Manica, at the buyout side, these institutional investors with the, you know, couple of billion per fund, they are asking for it. Are they getting the answers that satisfy them? Not quite yet, but we see, you know, the data requests, the LP due diligence questionnaires, the DDQs come in that want to know again and again, and the push, certainly more on the European side than the US side. I don't know if that's going to slow down based on the election results, and this kind of anti-diversity, anti-DEI type wave. But in the end, you know, diversity, we know, is the founder of good decisions. So it's quite interesting that when you make resilient companies, what you should be championing is that. But, you know, PE struggles with it categorically across the board, regardless of asset. And you think about asset classes, PE, generally private equity versus infra, you then have a worse collection on the other side. So I think there's a long way to go. I don't think there's a clear answer, but certainly the funnels have started to increase, and then supporting that growth through that, you know, all the things we've said already, having a network, being able to rely. There's not a ton of females in private equity, but I do find that every time I go to an event, you know, you make 5 or 10 connections. It's on turbocharge because you see the same people again, and you start to realize that your problems are their problems, and you suddenly have a support network of working out how to maneuver your political environment one at a time.
Curious. Yeah, Micki, yeah, go
Oh,
ahead.
no, I was just gonna say, you know, of course, I'm on the other side of this conversation. So I think for, you know, entrepreneurs, it's always a question of, you know, if and when to take money. And I think that, you know, advantages and disadvantages, and it's a serious conversation to have as an entrepreneur. You know, for me, the decision has been to bootstrap for the first few years. At least definitely, you know, through development in year 1 and 2. I think that there is a freedom in bootstrapping. Of course, it also makes, you know, you have to stay very lean when you're bootstrapping. And so there is quite certainly a trade-off. You know, to be very transparent, I still have a day job. You know, if I had made the decision to take funding, you know, or seek funding off the bat, that might, you know, be a different situation. And so I might be able to achieve faster growth. But I think that for me, I mean, kind of in this conversation, you know, and to the stats you raised when you asked this question, I know when I was originally doing research, they were very stark numbers in terms of funding that was going to female entrepreneurs. And so I think at the time, and understanding that, it was kind of like, well, if I can bootstrap to a certain point and get this off the ground, I might as well do that, because what are my chances going to be, when you're looking at these tiny percentages going to females? I think what is exciting is to see that this space, while maybe still tiny, does have more diversity within it. I think that one thing that's really important for founders to consider when they are looking at taking funds is, what that relationship looks like. I think, Angela, you mentioned, like, when you take the meeting, like, know the questions you want to ask. I think it's really important, there as well, for founders to really be considering, yes, money is great, but who are you getting that money from, and do they align with your values of your company? What's that relationship going to look like? Investors typically want to see returns on their investment. So is your company ready to deliver on that? So, I know for me, there is a freedom in not yet taking funding and being able, for us, development has taken a lot longer than we anticipated. I'm building a product that doesn't, there's nothing, from a technical perspective, we're not necessarily innovating. All these materials exist, or, they might be newer. Some of our materials are bio-based, but we're not developing, we're not a tech company. We're not developing anything new. We're taking things that already exist and just putting them together in a different way, in a way that hasn't yet been considered in the intimate apparel space. But there is still, we're doing something that's outside the box. And so it's taking longer than, perhaps just, building something that already exists. We're also building something that is within, we're trying to do something where there's friction within the system that we're trying to do it within, if we're talking about how traditional supply chains work. So anyways, that's all to say that, I think choosing the timing of when you're looking at taking investment is really important from the founder side. It will definitely be a part of, the conversation for my brand. It's just, for us, it's going to come a little bit further down the line, and probably be more aligned with when we're ready to scale versus just coming to market initially.
Yeah, finding the investor and then having a partnership perspective is important as a founder, raising fund. And we'll move it on to the Q&A session. We have a question to Jenny. So the first question is, as a pre-seed investor, you've seen numerous startups, and what common traits do you find in successful founders, particularly women entrepreneurship, that set them apart in the early stage of their ventures?
That is the million-dollar question. What do we look for? So I'd say, for us, regardless of gender, we look for these three characteristics. One is resilience. This is going to be a really hard journey. I think there was a few years in 2020 to 2022 when everyone thought entrepreneurship was really cool and people were jumping in, and they didn't realize just how tough it is, and how many years and how much perseverance, and even with all of that, how much you might not succeed. So I think the ups and the downs come really quickly. And so one of the things that we test for is, like, how resilient are these founders, and, like, what's been their background where they've had to overcome challenges. So I'd say, that's a big one. We're looking for founders who have a secret about the market that may not actually exist now. So there's plenty of, like, derivative products out there, or just one shade different than what you've seen. We're not looking for that. We're looking for, like, in 10 years, where is the world going? So we love a pitch that kind of starts that way, of, like, imagine a world, and, like, it's not necessarily a world that we understand or have much insight into, but the founder does, right? And they kind of know, or they have a hypothesis of where the world is going. And those are businesses that are extremely exciting for us. And then the last is what we call, like, the high cadence founder. So this is a very fast founder who can make decisions when data is presented. They can, run after it. They're not sitting there kind of, contemplating too long. They are really action oriented. And so those are kind of the frameworks that we're looking for. And And yeah, I mean, I think that applies to men and women, but if there's any advice I can, give to women is, just try to lean into those attributes. I mean, many diverse founders who start companies have a lot of resilience. And so make that part of your story, right? People want to know that, you can walk through walls, and many diverse founders actually have those attributes. So that's really great. And kind of some of the other ones similarly. So yeah, those are the characteristics that we look for.
Great. Thank you so much, Jenny. Next question for Manica. With your extensive experience in consumer brands, what trends do you see shaping the future of consumer products, and how can new founders align their businesses with these trends?
Oh, I mean, yeah, it depends on the sector, the subcategory. I think one thing that's become, I would say, across every category of consumer that I see is, like, obviously it's got to work. It's got to do what it says it's going to do from a consumer products perspective. But I think the consumer has been focused on what the brand really stands for, and just more on like sustainability and these values that are being transcended across like demographic in terms of age or race or background. I mean, we all live on this planet. We all like are more thoughtful about our decisions. So really like I think being a very thoughtful brand, not just a shade or two different from like, what is your reason for being, and being able to really clearly communicate that. Just in general, I think that wellness is one subcategory of consumer that I've been paying a lot of attention to. Women's health. I've long been talking about how I'm on the hunt for something in the menopause category. I feel like women have long suffered silently. I think it's the same generation of women that were very loud and proud about their struggles with fertility that are entering their menopausal years. And I don't think we're going to go into that chapter quietly, and we're not. And so I think, seeking solutions to wellness, to improving longevity, like those are all sort of buzzwords and trends within consumer. But just, from an overall, consumer perspective, I think consumers are just being more conscious about what they're consuming as well. And so I'm seeing that across the board.
Yeah, I think I came across there were two like underserved market within femtech, like longevity and menopause. Yeah, so totally agree with you. I have a question for Angela. How have you seen ESG consideration evolve in private market over the past few years? And what future trends do you anticipate?
Good question. So how have I seen sustainability essentially evolve? So it's a good point to plug my course, take my course, because we discussed this in quite a lot of depth. But I think what we've seen over the past is, just around the COVID time, we saw Larry Fink from BlackRock really push sustainability across private markets and the middle market in the US. In Europe, we saw sustainability kind of be slowly, organically baked into the way that investors were thinking about, commercial gains and investment thesis. So we see the confluence of those two things having essentially turbocharged the way that the markets today read, which is, sustainability for large GPs is somewhere either impacting their portfolio that might be touching European entities, and or is fully baked into the way that they think about investments. I think there's a broad range, right? Some people might just look at sustainability and say, this is an investment. I don't feel like this is ethical, and therefore I'm not going to do it with this capital, because they've got that conversation happening with their limited partners and they just don't want to transact in that way. Others will say, actually, it's our responsibility. This is an asset that we want to invest in. We will invest in it, and we'll also think about what we change as we invest in it. It's our responsibility to, take companies that could be better and make them better. That's just part of the whole period of what we do. I think what's going to be super interesting is that regulation in Europe has moved far, far ahead than anyone maybe could have predicted. That's impacting companies day by day in the portfolio of the majority of GPs in private markets. And then we've had this election in the US that likely will equal some level of kind of anti-DEI, anti-ESG sentiment. But in the end, when you look at kind of the global investing platform and private markets, Europe is pushing a lot of this. So a lot of it, the cat's already out the bag, in my opinion. And whilst we might see things like the IRA, change funding sources, or we might see kind of this green hushing, which is people not talking about things, but equally continuing to do them because, good business, sustainability makes good business sense. It makes, organizations and companies more resilient. I think we'll still see that as part of the majority of the toolkit for GP, specifically on the buyout side. Now I'll let Manica and Jenny touch on the early stage if that's useful, but I think there's a lot less control there typically for investors because they're typically minority investments and they're based on kind of founder-led, Micki was talking about founder-led kind of visions, and you're not necessarily buying huge companies and making them bigger, but you're investing in kind of this thesis and this ethos. So slightly different, but I think if you see where the majority of capital is going, there is some nuance and touch on sustainability. I think the time for the nuanced, are we greenwashing? We'll see that increase. So being super clear about why you've got sustainability in your investment process and what exactly you mean when you tie it to commercial value, that's going to become a big thing in the US. And therefore, like I said, the ecosystem's going to continue to boom. I think if you've done law, you've, seen the lawyers, they're building huge practices. As much as transactions have not been as active in the last 2 years as they typically are because of the interest rate environment, once those start again, I think there'll be support needed, but the support will be less fluffy. So less so what's the social impact, more so why are we looking at diversity for commercial value, for example? Why do we care about decarbonization? Oh, because it saves energy prices. That's a cost saving.
Thank you, Angela. We have a last question for Jenny and Micki. As founders and investors, how do you balance the dual roles of nurturing a business while also supporting other startups in your portfolio?
Well, I would just say it's not a dual role. It's more than that. I mean, we need to raise capital for our fund, so add that in. We need to manage our team. We have 6 people on our team, so I need to do that as well. So yeah, it's many different hats you wear. I love this job because I loved being a CEO. And running a micro fund is way more like being a CEO than being a partner at, Bain Capital Ventures or Bessemer, right? Like one of the big funds. The diversity of operations and strategy and all the different balls you need to juggle is really exciting, but it is time consuming. Oh, did I also mention we need to build our personal brands and do our own marketing because we don't have people to help us with that? So add that to the list. I'm chief marketing officer as well. And then we like to speak on panels, be part of the community. I teach at 2 universities, Columbia and Cornell. So there's a lot to do. But I think, getting back to the passion part, like this is the most fun. I wake up every morning and I'm like, how did I get this job? I do feel like I won the lottery, but you definitely have to love it because it's not a 9 to 5 and it's not doing one thing every day. It is a huge, diverse set of skill sets you need to bring to the table, and every day is different.
So inspiring. Micki.
Yeah, I mean, I think Jenny, that pretty much hit it. That I think that's for me what I thrive on is getting to do different things every day. Some days I think feel very successful when you're wearing many hats, and other days a little less so. We're not all experts at everything. So I think it is also like knowing when to delegate, when can you, whether it's, I've had an intern for a bit. I do have 2 team members. And so it's, knowing when to let other people step in with their areas of expertise to support you. But I think, I think also something to be said is like knowing when you need to take a break so that you don't burn out. I think I've been hearing a lot of stories recently from other founders about burnout, and I think that's a real part of it. It's not a 9 to 5. I coming into this space from a very different world, I did not work 9 to 5s. So being able to sort of craft my own schedule was very exciting to me. But often I'm working 12-hour days. So it's also knowing when to take a day off. I think that also a lot of within entrepreneurship, there's a lot of creativity, and I think that falls across like every aspect of your business, and how you approach, how you problem solve. But creativity, it's not something you can just like necessarily churn out, right? You need to be in a space where you can ideate, where you sort of get those creative juices flowing. And so, especially when we're in a culture where it's always go, 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 and with entrepreneurship, where you kind of are always like I don't want to say you're putting out fires all the time, but everything is kind of like, a little bit do or die. And so I think it's having the wherewithal to know when you need to take a little break so that you can keep going. I think that's really important. And I think just, passion is like such a big part of it. I think that's what keeps you moving forward in this space and allows you to kind of continue to nurture your company as well as yourself for your company.
Thank you so much, Micki, and everyone. As we wrap up, I want to extend my deepest gratitude to our incredible panelists today, Angela, Jhanji, Manica, and Micki. And your stories and advice have been truly inspiring, and to everyone and myself. And huge thank you to our attendees for joining today, for your thoughtful questions. And remember that the recording will be shared for those who wish to revisit the discussion. And lastly, we are looking for volunteers and members who are interested in joining our network group. So we're sharing a sign-up form link in the group chat. So please feel free to check it out. And thank you so much. And that's it.